The CFTC is opening the door to a tsunami of institutional liquidity for the crypto market by testing the possibility of listing spot cryptocurrencies on CFTC-regulated exchanges. In addition, the SEC has approved a leveraged crypto ETF. A year ago, not even in our best dreams could this have been a possibility, especially with a retail investor who is now afraid. How can we approach the markets? Let's look at it. In recent weeks, the crypto ecosystem in the United States has entered a completely different stage, marked by a regulatory shift that could redefine the relationship between traditional markets and digital assets. The CFTC's decision to allow, for the first time, spot cryptocurrency trading within regulated U.S. exchanges not only opens the door to greater oversight, but also to a potentially much larger flow of institutional liquidity than the market has ever seen. For funds, banks, and major managers that can only operate in environments with strict rules on client protection and stability, this move means the crypto market is beginning to develop the kind of infrastructure that has historically allowed assets to consolidate within the global financial system. The United States wants to regain supervision, regulatory clarity, and above all, attract the large financial players who were waiting for a defined framework before committing capital. The message delivered by Carolyn Pham goes exactly in this direction. Cryptocurrencies are beginning to operate under the same rules as traditional markets. That alignment reduces perceived risk, removes internal barriers within major funds, and prepares the ground for a gradual, first slow, then more accelerated, entry of institutional liquidity. And while the CFTC opens the game from the spot market perspective, the SEC is giving signs, although more cautious ones, that its stance is also beginning to change. The approval of the first leveraged ETF based on SHIB with 2x leverage represents a historic shift for a regulator that had avoided authorizing high-risk products in the crypto ecosystem for years. This fund does not buy SHIB directly. Instead, it uses derivatives such as swaps to double its daily performance. If SHIB rises 10%, the ETF attempts to rise 20%, and the same happens in reverse. The importance of this approval does not lie in the size of the product, but in what it represents. After months of highlighting the risks of leverage, including the October episode in which $19,000 million in positions were liquidated within hours, the SEC is now accepting an instrument that, although regulated, is still high risk. This indicates that the agency is beginning to recognize that the crypto market now has enough maturity to incorporate complex vehicles within traditional structures such as an ETF on NASDAQ, and in practice, it opens the door for other issuers to attempt the same path, expanding the range of products available to institutional investors. This regulatory shift coincides with an equally striking movement from the traditional banking side. The fact that Bank of America recommends allocating between 1% and 4% of a portfolio to Bitcoin marks a turning point in how the most influential financial institutions understand this asset. It is not an isolated opinion, it is an institutional message that legitimizes its role within a diversified strategy. For many clients, both retail and high net worth, the fact that a bank of this size considers Bitcoin a valid component changes risk perception, especially when the institution announces that it will incorporate several Bitcoin ETFs into its platforms, making access easier without needing to manage cryptocurrencies directly. This adjustment reflects a growing demand that can no longer be ignored. A systemically important bank moving from allowing access by request to offering it as a standard service sends a clear signal to the rest of the financial system. Bitcoin is no longer marginal and is beginning to integrate into the formal investment architecture. While traditional banks open themselves to digital assets, something unexpected is happening at the other end of the financial system. Stablecoins are entering dynamics that were once exclusive to central banks. The case of Tether is particularly revealing. The company bought 26 tons of gold in the third quarter of 2025, surpassing many medium-sized central banks, and already holds around 116 tons, placing it among the 30 largest gold holders in the world if it were a country. This behavior shows a profound change. Private, non-state actors are beginning to compete in the same arena as institutions responsible for national monetary policies. Tether does not use these resources to directly back USTD. These are corporate purchases financed with its own profits, verified by independent certifications. Over 100 tons are not associated with the XAUT token, but instead form part of a diversification and balance sheet stability strategy. In an environment of monetary and geopolitical uncertainty, gold becomes a safe haven asset again, not only for countries like Kazakhstan, Brazil, or Turkey, but also for companies operating at the heart of the global ecosystem. All of this suggests a structural shift in global gold demand, where stablecoin issuers, sovereign funds, and large companies share space with central banks. The first thing we need to notice is that the market is now in extreme fear. Right now, the indicator is showing a level of 25, but we should not forget that until very recently we came from extreme fear, where the gauge was set at level 10. All this fear appearing in the crypto market has been triggered by a recent abrupt drop, a sharp drop that traditional markets have certainly not suffered in the same way. Because, look, while Bitcoin was falling along with the entire crypto market, we were seeing how the American indices, the S&P 500, were in a pause phase. And you already know how we work at Crypto Insight after 4 years. When the retail investor is very afraid, what we do is use them as a contrarian indicator. If retail is afraid, it means retail is selling. If retail is selling, it means institutional players are buying. And if institutional players are buying, what we want to do is exactly the same. Walk alongside them hand in hand. Now, let's understand the reason behind this drop. Technically, Bitcoin is in a macro bullish trend, as you are seeing. Look at this tremendous ascending channel. We are going to study the alpha angles of this channel, both on the upper side and on the lower side. This is not a product of chance, much less the way price interacts with the median of this same working alpha angle. Things in this world are not random. Rather, the message being sent to us is that institutional players are indeed working this structure. And of course, what was the market context? The context was that the price had come to hit the ceiling of a macro channel, attempted to break it once, twice, 3 times, and failed. When a structure is tested once, twice, 3 times, and fails, expect a move in the opposite direction. But not only that, we are also experiencing the corrective pattern of this bearish impulse I am outlining for you, because here we have its W. All of this is a poor Y, and here we are living a Z that has ended up forming a rising wedge. And rising wedge Zs tend to collapse against relevant macro structures. For those who understand how this works, wedge breakdowns are always extremely exaggerated and abrupt. That is why we have had this great crypto disaster. Now, for anyone who has watched many Crypto Insight videos, you know perfectly well that when Zs collapse this aggressively, they always go to find a guideline we call the Z guideline. That guideline could perfectly sit all around this zone, though price could also stop earlier because of such an important median line. But the point is that when price faces the Z guideline, the reasonable expectation is for the price to turn around, either to gain time and form a small pause before collapsing, or ideally for the Z to continue its bullish trajectory. And I tell you, the most sensible thing is not to try to reverse a Z, because statistically, a damn Z almost always continues. Look, the previous Z was here, it collapsed against its Z guideline, and then price went up. Then the Z was here, it collapsed and then went up. Then the new wedge is here, it collapsed, and now, if we follow the probabilities, it should rise. If you did not understand complex corrective patterns before, I think I just gave you a masterclass to help you understand where this technical optimism comes from. But of course, we are now speaking at a technical level. While everything I presented to you at the beginning of the video, where the CFTC has given the green light for cryptocurrencies to be created and listed in spot form on US exchanges, already by that single piece of news, we must understand the world of possibilities that is going to expand for the crypto market. And we are speaking specifically about all the institutional liquidity that will enter the market, because we are not talking about Bitcoin spot ETFs, which in the end are synthetic products that replicate their underlying asset, Bitcoin spot, which only trades on private exchanges. Now, the United States, from a broader regulatory framework, will offer spot cryptocurrencies. And who wants to buy those kinds of assets? I'll tell you now, the retail investor is not going to want to, because the fees for those products are really high. But who will want to work and operate them? I'll tell you, the institutional players, who do not care about paying those extra fees, because these products give them an instrumentation that suits their current traditional investment modus operandi, something that otherwise would not be workable for them in Bitcoin. Now they will be able to do it, and this will create an injection of liquidity and demand pressure for Bitcoin and crypto. Evidently, we are speaking about the long term, because the CFTC has given the green light so that, for example, CME or CBOE may issue Bitcoin spot in the future. This will take time. It will not be immediate, but it does invite us to think that this weekly Bitcoin chart, if we already see we are in a bullish trend, trend, combined with news like this, clearly sends a message to the world that the bullish trend is going to continue on macro, long-term levels. And now I am going to tell you what I expect could happen with Bitcoin and the rest of cryptocurrencies. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Now look at the Bitcoin chart in its 4-hour time frame. Honestly, we are seeing how price has been falling, caused by the search for the Z guideline in Bitcoin. And our big doubt is the following. Will they use the macro median as a pivot point to begin the bullish direction? Or instead, will they need to create a climatic action and head toward Bitcoin's defense zone around $75,500 in order to then start looking upward? Well, this is the great mystery in the crypto market right now. This is the only question you should be asking yourself. So how can we obtain a qualitative answer that tells us whether institutional players will choose the first path or the second? By understanding how large institutions operate the price, we can say that right now we find ourselves in a moment, in an opportunity, where we have identified a creek, retail selling absorptions on both sides, and then we have seen very clear market buys. So, if in Bitcoin's recent drop we see that they scare us a bit to the downside, yes, but do not recover immediately to the upside. If we do not see a recovery as such, which, if it happened, would project an immediate bullish trend, if we see that this does not occur, the most probable message being sent to us is that we are heading into a bearish climatic action. Look how useful this is. Let's go to the 1-hour time frame. What we are saying is that we can expect a bit more downside, upon which we would demand that price recover immediately from the defense zone. If it manages to do so, then we could expect a major bullish idea capable of generating a black swan and taking us upward. I am sharing with you information of great value, only if you want to understand it, of course, because in order to work this bullish idea, price should not drift too far from a defense zone. That is why this information is so qualitative. And for that same reason, if price does not recover and keeps falling when a defense zone is lost, when a creek is rejected, when it seems that price is breaking a guideline but turns down again, the union of these concepts invites us to think they will continue falling. And the macro context is that we go to 75,000. And with this information, you can do a lot. You just have to understand it and want to work with it. Because if you look, Ethereum is telling us exactly the same thing. We have come to hit a relevant creek, and now we are evaluating the possibility that price has made a test of the creek to recognize it, pull away, and see if it then breaks it. But of course, if it overshoots, lights out, and then we likely head to 2,542. But what is the sensible thing now? The sensible thing is to understand that we are in a potential market extreme, whether now or after price goes a bit lower, because there is certainly still the possibility of continuing upward. So if you ask me, what would you do if you were me? In a first instance, I would not wait down here. I prefer to work the idea of accompanying price under a hypothesis where, with just a minimal break of price, we can discard it and then wait again lower, without suffering the entire bearish move. That is what must be understood. Now think about how incredible it would be if BNB, after a macro distributive phase that generated a black swan which projected a full bearish trend, just imagine if BNB is about to break the bearish curse and deliver a black swan to the upside, projecting a new bullish trend. But of course, before breaking it, price must first test it. What has BNB done? It has come, it has recognized the structure, it has stepped away, and now we are evaluating whether we may be finding the last point of support before breaking upward. If we do not find it, then it becomes implicit that we will continue falling. As I told you, when you break a structure, first you go, recognize it, step away, and then break it. And if we see that it overshoots, the idea is discarded and we look for macro bearish climatic actions, because Bitcoin would be telling us that the Z guideline has not yet been satisfied. Let me put you in context again. Remember, we are saying that when a Z in wedge format breaks aggressively, it goes to find the Z guideline. The normal thing is that it goes to $75,000. though sometimes an important macro structure like a median can stop it. So of course, if you are working a micro-level structure which, if it prospers even slightly upward, could help us become optimistic with the market, then if those microstructures fail, what is the plausible scenario? That the Z breakdown extends at least to 75,000. As simple as that. And I have explained how you must act and what you need to see in order to avoid suffering from a hypothetical drop should you be looking for a long position. Explained and clarified.
If this market analysis is getting you fired up to trade, let me tell you something important. Right now, our friends at BitUnix have an exclusive promotion for new users coming directly from Crypto Insight. Just by signing up, they'll give you $10 completely free. This is only for the first 300 people, so don't wait too long. Of course, the company is doing this to attract new traders, but for you, it's literally free money. And it gets even better. They're offering deposit bonuses. If you deposit $500, you'll receive $100 in futures bonuses. If you deposit $1,000, you get $200. And if you deposit $2,000, you'll get $400. Honestly, I think this is absolutely insane. Remember, this promotion is only for new users, and it runs until December 31st. And now, I want to know your opinion about the market. So leave your opinion in the comments. Also, give the video a like, subscribe to the channel, and click on the bell so YouTube notifies you of future posts. Good luck with your trading, and until next time.